Hello there everyone, my name is Decouple and welcome back to my YouTube channel. Now guys and girls, this video is gonna be mega important. It's gonna be probably very long, but it is gonna be so deep you cannot afford to miss this video. And when it comes to the technicals right now on Bitcoin, as we came back, and if you have watched my previous video, I told you that most likely we're gonna see a rebound here, that I'm not expecting Bitcoin to actually go straight down to our initial last target for this kind of a move from here at 17,600. So, and we are actually seeing this rebound just spot on perfect, so call me Mr. Spot On down in the comments. When it comes to my short trade, as soon as let's go to smaller time frame, as soon as we went up here, I just closed it. I've taken an insane huge fat profit, and as I told you in the previous video that you should consider to at least take some profits here. So I'm out of the short trade. I will seek for a better opportunity, and I'm gonna definitely keep you guys updated. But in this video, let's take a look at the general scheme. There is a lot of misinformation online right now as to what is happening, so I really want to cover some very interesting topics, some really interesting news, as well as very important macroeconomic, on-chain data that is. Look at this. I've prepared so many things for you that after watching this video, you're gonna be so well educated when it comes to Bitcoin that it's gonna go beyond belief. You're gonna speak with someone from Goldman Sachs, like some of my friends from Goldman Sachs, and you will say that, and they will think that you're a professional trader. So watch this video from the beginning and until the end. And guys and girls, as always, this video and my content on YouTube is free. I don't accept any donations. I don't ask for any money from you. All I'm asking is to go down below, leave a like on this video. As I wake up in the morning and I see 1,000 likes, 1,500 likes, it motivates me to create this content more and more for you. Let's crack 2,000 likes. We can do this. Let's crack 2,000 likes. And also leave a comment down below or share this video. There's also a share button down here on YouTube. It would be very, very much appreciated. And as always, guys and girls, if you're taking these trades that we're taking here, you really want to trade on the right exchange with good liquidity and very good bonuses, and that is, for me, I'm trading either on Bybit or on BitGet, but BitGet just has launched 0 spot trading fees. If you use my link down below, you'll get up to $8,000 in initial deposit bonuses. You'll get a $5 sign-up bonus for just using my link down below. You'll get 15% off trading fees, and also 0% trading fees on spot trading, which is crazy. A $50 USDT bonus for 50k futures trading volume, which is really easy to achieve. And also, if you deposit more than $500, you'll get Tom's Crollo crypto course, an incredible paid crypto course completely for free, which is valued at about $400. So it's an incredible value, and it's going to also support the channel and support our community, and you'll be trading on a good exchange with good liquidity, really professional setup itself. The platform itself is very intuitive and very nice. And again, they're running this for a very limited time in terms of 0% spot trading fees, only if you're gonna use my link down below. So and without any further ado, let's just jump right into this because we have so many things to cover. It's going to be, let's start with some news, and then we're gonna talk about price targets and expectations for Bitcoin. And as I said before, after watching this video, you're gonna be just super smart when it comes to crypto. And one catalyst could trigger massive rallies for Ethereum and crypto this month, according to an analyst, and it's not the merge. So what the hell are they talking about in this article? You know, we're waiting for the merge on the 13th of September, which is coming very soon. But what they're talking about here is actually this thing right here, which is the CPI. And the CPI is coming, the next CPI date is coming on September the 13th at 8:30 a.m. Eastern time. And it very much coincides with the actual merge of Ethereum. So we'll see what happens there. The oil keeps going down, which is good. Look at it, guys and girls. From the peak, currently, the oil has gone down 37%. So this is going to be definitely affecting the inflation. I know that it's not the only thing. There are some of the things that are still climbing when it comes to the inflation, but at least the numbers are going to be, at least statistically, they're going to be good. So let's move on to the next thing, and that is MTGOX creditors fail to set repayment date, but markets to remain unaffected. So really, just really quickly about this. We've spoken about this before, guys and girls, that I'm not seeing MTGOX as being a threat to the markets at this point at all. So here also in this article, we'll see that 137,000 Bitcoin would be dumped. So that's the fear, would be dumped into the market very soon. And at the same time, the exchanges, the exchange had not yet devised the infrastructure needed to facilitate such a move. And therefore, there would be no repayments anytime soon. That's number one. Phew. easy peasy. Then furthermore, as things stand, Wall has highlighted that the customers affected by the empty GOX have not even been able to register their address where their due Bitcoin, the Bitcoin and Bitcoin Cash that they're supposed to receive, signaling that there is no immediate reason to worry about an impending market crash. And the creditor also believes that the payments will most likely take place in many installments. Forget about empty GOX for once. Thank you. So next thing is Binance to temporarily suspend withdrawals and deposits of Ethereum and wrapped Ether to prepare for the merge. Just something that you should keep in mind. And yes, I'm still seeing my own ads, and there still is a 50% off on my university grade trading education at offer.tomscrollo.com. So become one of my students today. And so you can do all these things yourself, actually. This really doesn't have any impact on the markets. I just wanted to put it out there so you guys are aware that the deposits of Ethereum and wrapped Ether and the withdrawals are going to be suspended coming the merge. So the next thing is pretty cool in my opinion, and that is that IMF executives are calling for global crypto regulatory regime to keep consumers safe. So if you don't know what IMF is, it's quite a big thing really. It's the International Monetary Fund. It works to achieve sustainable growth and prosperity for all of its 190 member countries. So it's quite a big organization, and they're currently calling for this global crypto regulatory regime and regulation, which a lot of people are afraid of, but these are the same people that are actually afraid of the dump of empty GOX, who are just uneducated and just not smart, and they don't have any inclination or understanding of the past history, like the regulation of junk bonds back in the 80s, when everybody thought the junk bonds are going to die, when in reality that market of junk bonds went 100x. So the same thing we're going to see in the crypto industry, and I'm really waiting. So thank you IMF to finally pushing the gas pedal on regulation, because this is going to be laying the framework for institutional investors and is going to go to the moon. Next thing, Ether price could decouple from other crypto assets post-merge, and this is a very interesting one. So in September, I explained that the upcoming Ethereum upgrade would introduce institutional investors to staking yields similar to certain instruments such as bonds and commodities, while also becoming much more eco-friendly. We've spoken about this before. So the report said that ETH staking is expected to offer a 10 to 15% yield annually for stakers, therefore making ETH an enticing bond alternative for institutional investors, considering the treasury bonds yield offer much less in comparison. So certainly we know that it still is a brand new industry, that it still is highly volatile, etc. So it's hard to compare those two institutional instruments of the current magnitude, etc., of the current world, so to speak. However, this is a step in the right direction. And when you understand these things and what the merge is doing and what subsequently roll-ups are going to be doing, like the project of OP token, for example, a very cool one, and then sharding in the following years, potentially even in 2023, which is going to make Ethereum just as fast as Visa or MasterCard and scale the network itself 100x. My goodness, it's absolutely incredible what's coming. So yeah, anyway, next, Bitcoin is a wild card set to outperform, and this is the Bloomberg analyst. So they're saying here is that in this article that in a long-term perspective, it's basically an asymmetrical bet, which brings me to a long analysis of on-chain data right now that you literally cannot miss. And guys and girls, one more reminder, if you want to be trading actively yourself, longing or shorting Bitcoin or really any other cryptocurrency, and you want to be following the markets professionally, be a professional trader, then you need a proper exchange. And down below, down in the description or in the pinned comment, you can find up to $12,100 in initial deposit bonuses, $4,100 with Bybit, and up to $8,000 in initial deposit bonuses, plus all of these bonuses with BitGet. So use that opportunity right now. And I'm going to link a tutorial to Bybit right here so you can check it out and stay smart and understand how to use it, how to use leverage in a smart way, etc. Okay, let's go back to this right here. And this is a very interesting. I'm going to go through all of these on-chain metrics bit by bit and step by step, and I'm going to explain exactly what's coming for Bitcoin and what's pressuring the price down right now. And you're going to be able to explain this to yourself, and you will understand why is it going down. Is Bitcoin going down right now because it's dead and it's a Ponzi scheme? Or is it going down because there is some kind of a explainable reason for it? And I'm going to give you this reason right now. So let's begin. Oh, well, like the video, comment down below, and let's begin. Okay, so Bitcoin accumulation trend score by a wallet cohort. So here in this, I know it looks complicated. Let me try to explain this in very simple layman terms. And all this stuff is provided by Glassnode, and thank you to Glassnode for all this information. It's absolutely incredible, and it's so transparent. That's why I love crypto. It's so transparent. So basically here we are seeing accumulation trends. So anywhere, this is a line of people with less than 1 Bitcoin, and this is a line of entities with more than 10,000 Bitcoin in their holding. So basically blue means that they are actually accumulating, so they're buying. Red means that they're selling, they're distributing. So, and here we're gonna see a very interesting situation that right now in the current price, in this vicinity, right here in Bitcoin, we are seeing massive dispersion and sell-off in from institutional, well, not institutionals, but from big wallets holding more 10,000 Bitcoin. And you're gonna say, well, you know, if all the big whales are selling right here, that means that Bitcoin is dead, and you know, even the big ones are selling. So, but hold your horses. Let's put it in perspective, and you will be a professional in literally in under the next 5 minutes. So thing number one is that look where they've purchased. They were accumulating quite heavily right here. So where was this? They were accumulating basically right here when it actually went down. So, and now they're distributing basically right here and providing liquidity to exit, so to speak. So they're actually using the liquidity to exit. So, and this is basically a trade. They buy here, they sell here. So that's all. It's not actually indicative of them getting out of the market for good. And I'm going to prove it to you closer to the end of this video because we still have a lot of things to cover. So I wouldn't really be very worried. But as we can see, the accumulation from the smaller fish, so to speak, these ones right here is very weak. So there is a lot of fear in the market from retailers, while the whales are actually manipulating the market and making money on the idiots, so to speak. So let's move on to this one. So this is very interesting, and this is going to give you an interesting perspective into what you can expect from the market right now and what is the current state of the market. And this is going to be the Bitcoin hodler net position change. And you will see right here that in this distribution, because when we were seeing this incredible rally in the price of Bitcoin, and we've seen this rally, well, it was right here. So this was basically this previous bull market, and that's where we saw distributions. So those who were buying before at lower prices were actually distributing and selling into this massive rally. So that's why we saw huge sell-offs and a lot of coins being spent and people taking profits. And now as the price has started to go down and we are seeing this whole basically bear market right here, what we are seeing in this accumulation trends and the accumulation overall, it's peaking. The lower the price goes, as you can see in green right here, it's actually peaking right now, which is an incredibly good sign. So therefore this, you know, these two charts put each other in perspective. This is short-term manipulation and trading, so to speak, which is happening from the big wallets, and this is a good signal, and this tells us what is the long-term outlook, whether people are actually accumulating big ones plus small ones, and they are. So let's move on to this chart right here, which is an incredibly great example as well as to what is happening right now. So the red one is the Bitcoin accumulation addresses. The orange one is Bitcoin illiquid supply. And by the way, if you don't know what illiquid supply is, so here is the explanation. We can also compare long-term supply to the number of accumulation addresses and to illiquid supply to gain a more comprehensive view of potential changes to supply dynamics. Note that illiquid supply is defined as coins held in wallets with little or no history of spending. Accumulation addresses are those which have received more than 2 payments but have never spent. So keep that in mind. And as we can see right here, and also the blue one is the Bitcoin long-term holder supply. And basically it's all going up, all of it. So the illiquid supply, which is just untouched, is going up because there is more conviction in the market. There are more people understanding the future of this. It's as simple as that, and it's obvious. When people are just focused on a short-term perspective, they're calling this asset a Ponzi scheme because of this move downward. When you, as smart investors, you understand the more complex things that those idiots and naysayers are incapable of comprehending. And you're welcome. Well, subscribe, hit that notification bell. for new updates like this. So the next thing that we want to take a look at now, well, this is something we've read already, and this is very interesting. So short-term stress test. So the big question then is, if we have, everything is going up and everything is so great and beautiful, then why the hell is the price going down? And that's a fair question, and I got an explanation for this as well, because I'm Thomas Corallo, I'm Mr. Spot On. So, and that's going to be the short-term stress test. So the then entity adjusted URPD is below this chart right here, and it presents the supply distribution split into short-term holders, red, and long-term holders, which is blue, and the supply of those. Here we can identify an extreme concentration of short-term supply around the current price, reflecting the recent acquisitions and day-to-day trade volume. However, following the recent drop in price, the majority of short-term holders' supply is now holding an unrealized loss, so basically hurling this cohort into a severe degree of financial stress. So what we are seeing basically right here, as the price went from $25,000 all the way to back to $19,000, what we are basically seeing is a lot of short-term holders who have acquired Bitcoin in recent times are actually in a loss. So there is a huge pressure, as we can see, for short-term hodlers, not long-term hodlers, because they're still in profit overall, but for short-term hodlers. So and what we're going to see here, for example, therefore we can observe that 13.3% of the current circulating supply lost their profitable status during the move downwards from 24K back to 19,600, which I just showed you. This suggests that 2.55 million, or 13.3% of the circulating supply, last transacted within this price range. So from here all the way down to here. So what does all of this mean? Let's move to this screen right here. So this stress is echoed in absolute terms by short-term holder supply in a loss. Here we can see that 1.53 million short-term owner-owned coins fell below their break-even price during the move down from $24.4 thousand per Bitcoin. Therefore, 1.53 million out of 2.55 million, so this is 60% of coins, are trapped within this range, and those are represented by short-term holders. This is a disproportionate representation of a cohort with only a 16% share of circulating supply, further demonstrating the movement of coins in this region is short-term holder dominated. So I know it's complicated. Let me explain. So basically all these moves, oftentimes what we are seeing right here, this is dominated by short-term holders that are just basically holding about less than 15-16% of circulating supply. So they're not as significant as the ones that we've seen before, these big boys and long-term hodlers and long-term with the long-term conviction. So because of these traders and these trigger-happy people who are too scared to hold it, they are moving the price quite erratically and bring a lot of volatility. But in a long-term perspective, and this is the main meaning of this whole thing, that in a long-term perspective, this is meaningless. It just brings a lot of pain in a short-term perspective for sure, plus macroeconomics, plus all the geopolitical tensions, plus Russia, Taiwan, all of that. I understand all of this. But the on-chain data doesn't lie, that this predominant movement is attributed to only a small cohort of Bitcoiners, so to speak, and those are only short-term holders, and this is what we are seeing. So if we're going to move on to this chart right here, we're going to see that we can bolster the above observation with the percentage of short-term holder supply in a loss. So basically right now we have a peak in short-term supply being in a loss, and this brings short-term holder supply in loss close to almost to full saturation, with 96% of the short-term holder supply now being underwater, guys, and this is very important on their holdings, so they're in a minus. Full loss saturation has occurred 3 times within the prevailing downtrend. Actually, this has happened before, which interestingly marked the local bottom formation events. This is in effect a result of capitulation as sellers transfer coins to new short-term buyers, short-term holder buyers, so to speak, who put in local bottom and then return to profit upon any meaningful price recovery. So this brings us to this chart right here. So this has happened before, and every time when we've seen this peak in short-term holder supply being in a loss, we've seen the price bottoming. So this is also pretty cool. So with holder conviction remaining steadfast, the onus now falls to the short-term holders to hold the line. As the market is clearly testing their resolve, it appears that the majority of daily traded volume and churn is being driven by recent buyers as they jostle for the best entry. This explains everything. And when we move to this is also pretty interesting. Let me just quickly, we're almost done here. Given that somewhat dire price action of late and a high concentration of trigger-happy short-term hodlers is the current price range, the chances of another capitulation, this very important event, are non-trivial, meaning that they're hard to predict and to understand that it's still possible for another capitulation event to take place. Thus, it is prudent to prepare for all outcomes. In the event of the further price slippage, we can consult two pricing models hovering above the market. And this is very important. This is the cherry on top, and this is what you've been waiting for, to give us the fair price of Bitcoin below which the price is going to struggle to actually go below. And this is where, a lot of the short-term hodlers are going to be completely flushed out. And this is where, only the big boys are going to be remaining, holding the bags all the way up to the new all-time high. So, and this is very interesting. I always thought, what is that fair value? So basically, the balanced price metric attempts to capture fair value model for Bitcoin. This is produced by calculating the difference between realized price and the aggregate sum paid for all coins and the transfer price, the cumulative USD value of coin days destroyed. Then the second one is the difficulty regression price, attempts to model the all-in cost of production for Bitcoin mining, calculated by running a log-to-log regression model between difficulty and the market cap. I know it all sounds complicated. We're going to take a look at the chart. It's going to make perfect, easy, simple sense. Both models supported the 1 hour wick during the capitulation, by the way, to the current cycle low, and are currently providing a confluence of support at $17,000 mark. Therefore, the two models pricing may be considered an area of interest and a fundamentally derived area of support in the event of further market weakness. And this is the chart right here. So basically, this is the balanced price. This is what we've spoken about right here. And the second one is the difficulty regression price, which is basically the purple one or blue one. And we are seeing it at about $17,000. Let's just confirm right here, $17,000 mark. And that's the one that we have marked as our current local low right here at $17,500. So that's why I said that this is our initial target. But for me, if we're gonna go to test 17K again, I'm gonna definitely buy some Bitcoin at this level. And then I still stand quite strong that even in the potential short term, if we're gonna trigger and we're gonna see another capitulation event, we're gonna see another black swan event or whatever, and we're gonna actually wick down below this fair value model that we're seeing right here, which is in Glassnode, it was mentioned, still is possible with all the short-term hodler pressure, then we potentially could wick down to 14K potentially. But even in this kind of an event, it's going to present nothing else but an incredible opportunity, especially when we are understanding all the things that we've seen previously here, because this data, guys and girls, doesn't lie. So here's my crypto course. Check it out, watch it, become a part of this crypto revolution. Stay smart, and let me know down in the comments what you guys think about this kind of a longer video. Do you enjoy it? It's more complicated, I know, but this gives an incredible insight and you become really smart in the world of crypto, so you know exactly what you're investing in. And as always, stay smart, stay rich, and yes, I'll see you in the next video. Bye-bye.